Good morning. Welcome to Diamond's Edge Live. My name is Greg Diamond, and today we're going to be looking at some divergence within the stock market. We're going to be looking at some of the sector divergence, some technical divergence, okay? And what I want to start with first is this isn't a market where, I'd go all out short just because of some of the divergence I'm going to show you, okay? It's also not a situation where we get incredibly long, get aggressive, okay? Essentially what we're looking at is somewhat of a pause. Now, this could continue to grind higher. We've kind of seen that. We looked at that mid-May top, which I'll show you in a chart like XLF, the financials. Okay, that hasn't been breached. Okay, and then since then we've seen some sectors rally beyond that, some haven't. So we're seeing this turn in the market. Now, again, it doesn't mean that you just go out and start shorting the market, or it also doesn't mean that you start getting aggressive with long call options. So I'm going to show you what I mean by that, and how to play it. And just this morning, we got two very interesting headlines. Okay, we got first that a trade deal is all but done with China, and this kind of goes back to what I said a few episodes ago regarding the trade war is over. Okay, the market had anticipated, that things are going to get better, not worse. We've seen that. What I found interesting about that, watching the futures market this morning before I hopped on here, is that there really wasn't that much reaction to that. Okay, it was kind of a sell the news event. Now, what pushed markets higher, what pushed stocks higher, was lower inflation. So all the things that the bears were talking about that was going to be so bad, back in March and April, tariffs are going to be terrible, inflation is going to be out of control. That's not true. And the market has shown that. Now, inflation is backwards looking. We're sitting here in June, but these tariffs, been on and off or changed or whatever for a better part of 3 or 4 months, but we're not seeing that inflation come through. So is the market, our investors, is the price action that we see now going to turn to the Federal Reserve, which announces the next policy rate decision here soon, and inflation? Okay, what's going to happen with earnings coming up? Okay, or is it just simply a positioning thing? Bears got stopped out, shorts got stopped out on this entire move up. Okay, now even long investors might be taking a little profit and or are exhausted. So now you have a situation where you're just kind of in this pause. Okay, so that's kind of just the overall mental aspect of it, if you will, fundamental aspect of it, if you will. So now let's turn to some of the charts and look at what I'm seeing in terms of some of this divergence that I'm talking about. So let me share my screen here. And what I want to start with is XLF, okay? And again, so we mentioned this, mid-May high, and this could pop up here, into what we just saw with inflation numbers coming out that were pretty good, but look at the bottom here, okay? What we're seeing here, and you're going to see this, so I'm going to show you some of the sector rotations. That means, XLF not making a new high, but, SMH did. Okay, that's the price divergence. And then we also have the technical divergence. So as we're making new highs, let's say this pops up, this RSI composite index or not. Pretty simple, but again, this is just something, and we looked at, a time factor earlier this week that suggests that this could be at least a short-term top. Again, it might just be another bump in the road, very similar to what we saw, in mid-May. Okay, so that's XLF. Now, if we take the opposite side and we look at something that's very strong, you can see SMH has rallied to a new high. Okay, but now look at the RSI, definitely in overbought conditions. Okay, and when you look at the composite index at the bottom, notice how this is diverging with this new high and the new high in the RSI. Again, this isn't saying something that you just need to go, balls to the wall short. It's just telling me that maybe we might have a little bit pause in this uptrend. Okay. Now, I mentioned I was watching futures market. Let me just shift because I'm looking at Nasdaq futures here right now. Okay, and let me just go to a short-term chart. All right, so you can see how. All right, this was where the trade deal. Let me zoom in here. This is with trade deal this morning. It popped up, it didn't really do much, and we got this big pop up to a new high on the inflation, but since it's coming down. All right, again, I'm not saying that this is going to be a major top, but what it is telling me is just to be a little bit cautious. Okay, we can also look here, and again, this is a Nasdaq futures. You can look at the Nasdaq 100 or the Nasdaq Composite Index or XLK. whatever your favorite instrument is to watch. But you can see here, it's very similar to SMH. You can see how we have this composite index is not making a new high. Even the RSI is showing negative divergence. And what do I mean by negative divergence? What I mean by negative divergence is if the price is making a new high, okay, so let me highlight this. So like from this mid-May, you can see here it made a new price high, but the whatever indicator you might look at, and I like to look at the RSI, I look at the composite index, you could look at MACD, there's tons of momentum indicators out there. Negative divergence is when they're not lining up. So this isn't making a new high with price, this isn't making a new high with price. Again, it just tells me to be a little bit cautious about getting aggressive here, okay? We can also look at XLI. This is very similar, tracks the Dow. You can see it made a new high here on, was that June 9th, okay? That was on Monday. So, again, we could pop up here, but we'll see if this holds. Something that I'm looking at within this chart, within a lot of things that I've seen, and again, that could last in today, but we have this ending diagonal, okay? And basically what it looks like is kind of like this. Let me zoom in here so you can see this. And so what we could see is something along the lines of it has this overlapping pattern. Maybe we pop up, it goes something like that, and then we have a drop. Now what happens with that drop? That's where, for me, I look to start to get aggressive. I want to start buying on weakness, simply because we're in this uptrend. I was concerned, I'm not gonna say worried, but I was concerned about that mid-May as possibly being, another drop to test the April lows, to complete that larger wave 4 that we discussed in previous shows. Now that we've gotten past that, I just do not see that as happening. So what does that mean going forward? To me, it means, hey, this is a bull market. We're gonna ride the lightning higher, and really look for weakness to buy. So what would cause this? It could be anything. It could be the Federal Reserve saying, we still don't have enough data. It could be, again, like I mentioned earlier, positioning. Bears got stopped out. They're not doing anything. Longs take profit. We have this sell-off. It could be Ukraine, Russia. Who knows? It doesn't really matter why. What I'm looking for is to weakness to actually get aggressive, not get aggressive up here. So you can see again, if you XLI made a new high, XLF didn't. SMH semiconductors still hasn't made a new high, but it is tracking higher. So you can see here, the high made back in late last July hasn't been reached yet, unlike XLI. Okay, we can also look at a sector like the momentum factor fund, which I like to look at. This made a new all-time high. Okay, and this topped out, I believe, on Friday. That was last week on the 4th. Okay, so does this pop up higher and we get another leading diagonal? You can see here, composite index at the bottom is not making a new high. Okay, RSI overbought, not making a new high. So you can kind of see where I'm going with this. You can see the divergence both between the price action, between the sectors, and then on the technical indicators as well. Okay, now let's look at what other ones did I have? Oh, let's look at the transports. This is something I haven't outlined in a while. Okay, and it's always important to look at, even though the transports aren't as sexy as semiconductors or quantum computing stocks. It's always important to look at it because they are a big driver of the economy still, pun intended. So what we can see here, we had this new high that was yesterday. Again, looking for a possible short-term top. Okay, and you can see on this new high that we did not have new highs in the RSI. We did not have new highs on the composite index. So again, this could just be something where we pull back, okay, and then we start the new uptrend. Now, looking at this transport index, this was something where, okay, this mid-May high, it had a sharper correction in the transports than it did some of the other things. So I was like, okay, this could be the situation where we try to test the low, but we didn't. So what this tells me is that we get any weakness down into here, again, late June, early July, that's a situation where we can get aggressive, okay? So that's the sector rotation. Let's look at a couple individual stocks. One that I like to look at is Caterpillar, okay? And you can kind of see here, this hit, I was looking at some Fibonacci retracement levels, okay, over the past couple of days. You can see here we hit a new high yesterday, and like everything else that we've seen so far, RSI composite index not making new highs. We see that negative divergence. Okay, we can look at AMD. Actually, let me go to this chart. I outlined this to 10 stock trader subscribers this week. You can kind of see here I have this wave 5. Okay, maybe we get into this 200-day moving average up here today. Okay, no problem, and then we get a correction. So everything is kind of tracking for me to say this isn't something where I'm going to get aggressive. This tells me to be patient. Okay, and then we can look to buy weakness. Another stock. Let's look at some of the Magnificent Seven stocks. So here is Google. All right, and this has largely been underperforming. And so again, you can see, the Nasdaq is close to new all-time highs. Google isn't. Do we get a pullback? We can look at Amazon, same type situation. This is stronger. Okay, RSI overbought. Composite index just slightly below the recent high. This tells me, all right, let's see if we get a pullback to buy. We can also look at Apple, which is drastically underperformed relative to its peers. Okay, you can kind of see here, this has done nothing but gone sideways. Okay, so yeah, maybe if we get this drop into here, this completes this sideways move. We hold this low, this April 7th, April 8th low in Apple. That could actually be a situation to buy Apple. All right, and then last one is Tesla. This is something that I believe I outlined it last week. And I've outlined it to 10 stock trader subscribers as a trade setup to watch. And again, I want to see how the overall market trades. But this was last week with this Musk Trump feud. I'm not getting into all that drama. I'm just focused on the price action and the setup. So for me, this is one of those nearly perfect textbook Elliott wave counts. You can see here. Sometimes it's hard to see, but this green line where the big drop last week was, it dropped exactly to the 61.8% Fibonacci retracement level. So to me, if we get a pullback, let's say over the next week or two, this is a situation where we can look to buy. Okay, buy call options, buy the levered Tesla ETF. And here's the other situation: if we actually break out, I'll buy that too, because this tells me this setup is something I always look. There's certain setups I like. I like to say there are certain setups I can't not trade. This is one of them. So if we get weakness, I'll look to buy call options. If we get a breakout, this is where Tesla, could really rally to make new all-time highs. Won't happen in a straight line, but this is a setup that I would absolutely trade. Okay, so that's what I'm focused on this week. Again, it's just looking at the futures here. It's starting to pull back a little bit from this pop. So this is a situation where we could be looking, at, again, a short-term top. It doesn't mean that it's going to be some type of crash. It just means to be a little bit patient and look for weakness to buy. Okay, so that's what I'm focused on this week. I'm happy to take any questions. Let's see what we got here. Can you look at RTX, please? I sure can. Let's see, RTX. So this is tracking very similar to the market. Obviously, we had this this April 22nd low was the higher low in the S&P 500. And this is very similar. All right, let's just look at this the same way that we've been looking at everything else. Composite index not making a new high. Okay, the RSI is in overbought conditions, but we did get this new high. So just look at this right here. And this would tell me just to be a little bit cautious, right? This is not making a new high versus price. There's your negative divergence, technical divergence. Wait for a pullback. Could you check out Intel, INTC? This has been a dog for a long, long, long time. There have been plenty of investors who have, they've wanted to buy. It's going to be, the next new thing. They've gone through changes in their CEO. They've spent money. They've made acquisitions, but Intel has just not kept pace with the rest of the semiconductor stocks. It's not something that I want to trade. It's not something that I'll obviously look at it for you here, but it's just been in this long-term downtrend for so long that unless there's something that drastically changes and we see that in the price action, I'm staying away from it. How often do momentum-based funds rebalance their portfolios? Are they just looking at short-term trends? That's an excellent question. So they're all going to be a little bit different, but what I can tell you is the pension fund that I worked for, we would rebalance our portfolio depending on the sector, but we would do it monthly, we would do it quarterly, and we would do it yearly. And that just depends upon your performance, depends upon what kind of money is coming in or going out. But usually I would say they do it monthly and quarterly. Are they just looking at short-term trends? They might be looking at that, but it's really about where they're overweight and underweight and what they need to move around to achieve their goals in terms of performance. SPY consolidates soon around 613 for 2 to 3 weeks before going on to new all-time highs into early August. Yes, absolutely. That's the base case. So let me just simplify the question. We'll look at the S&P 500. So I believe what he's asking is, here we consolidate here into the end of June. So let's this is what I'm looking at in terms of time and price if we take into account the divergence that I'm seeing. So it could be something like this. Okay, and again, this is just guesstimates. Okay, that it would be something like that. Okay, where we would get a low into June. We'll see what happens with the Federal Reserve in the middle of this month. Okay, but this is something that I would see. We fill this gap here in the S&P 500. Maybe it trades a little bit lower. Okay, that's where something. This is the setup. This is my high probability setup that I'm looking forward to trade. Now, could I be wrong and this continues to grind higher all the way into August? Yeah, that could definitely happen. Okay, we are set up for that. Okay. That wouldn't be the end of the world, but this is the highest probability setup that I'm looking at. For traders with limited capital, is it better to focus on sector ETFs or cherry pick individual stocks? Well, I think that goes to trading and what you want to trade. Are you going to just be trading options? Are you just going to take positions within those ETFs or stocks? For me, I don't think it's whether you're trading ETFs or trading individual stocks doesn't matter. What I would say to a trader with limited capital is, if you're going to trade long options, you have you can use just, let's say, $500 and have tremendous upside. Okay. But if you're just going to buy positions with ETFs or those individual stocks, you have to put up more capital with not as much upside. But it's really about managing your risk. So, Paul Tudor Jones likes to say, it doesn't matter whether you're dealing with $10,000 or $10 billion. It's your return rate that matters. It's your win rate that matters, and that strategy. So you have to determine, what that's going to be and how much risk you want to take. So that would be my advice. Are investors just getting numb to it at this point, to all the back and forth with China tariffs? Yeah, that's a great question. I think, it's kind of like I said at the beginning, that, the trade war for the most part is over, and the fact that it's not going to be as bad. Okay. We saw, the Liberation Day. Okay. Everyone freaked out. And then what was it? There was a 60-day pause. There was a 90-day pause. People coming to the table, everybody meeting. So if the worst case scenario was the clipboard or the whatever board he was showing with, all the rates, that was the worst case. And almost immediately those turned around. Everybody started coming to the table. So that's not the worst case. And you're seeing that reflected in the stock market. How about WBD with the news of the company splitting up? So when it comes to mergers and acquisitions and splitting up and all this other stuff, this is like I look at this chart and I want no part of this. I want absolutely no part of this stock whatsoever. It's in a long-term downtrend. It has these big, it has these spikes up, but continues with it, and then it's going to have, it's going to split up. Okay, let's see what happens after the fact. But this isn't something that, I would touch personally. How are we doing with gold this week? So after the inflation number this morning, gold popped. Okay. And, that makes sense. with the dollar weakening. So let's take a look and see. It's come back a little bit. So here we have a situation where we had this uptrend, from what's that? Yeah, the mid-May. Okay. So what I'm looking at is how is this going to correlate with stocks? Okay. Gold hasn't done much, as stocks have grinded a little bit higher. So if stocks pull back a little bit, so let's zoom in on the short term. All right. If stocks pull back a little bit and we see gold pop, this is a situation where, we can see gold try to make that a new high into the end of June. Okay. Now, if that high probability that I outlined earlier is not the case, okay, and stocks just keep rallying, then gold can pull back. What will be important to see is if gold can hold this mid-May low and the support levels, below it or above it. So let's just take a Fibonacci retracement real quick and see. All right, so I'll do one here. I'll do one here. So what I would look for, and I'll delete this real quick just because there's way too many lines. I don't really like that. So if gold pulls back and it doesn't hold, let's say the 32.25 level, that's where I would be getting a little bit concerned about gold, okay? But if it holds here and then breaks out, that's going to be really good for it. If when you get a buy for Tesla, will this be posted for us on 10 stock traders? Absolutely, 100%. Get ready for it. What are your thoughts on SHOP? Shopify. So hasn't made a new high above the highs in February, just like some of the rest of the market. But overall, I mean, you can see how this is trading pretty well from these lows. It's holding the uptrend. Okay, it's above the 200-day and 55-day moving average, which is good for momentum. Okay, so even if you get a pullback here, maybe it fills this gap here around, what's that, 94ish, 95. Okay, you get maybe even a condition where you get positive divergence on the CI and RSI. That's something that we could probably look to buy. Going back to Tesla, I noticed a gap around 150 or so. Do you think it will ever fill? Let's take a look. There's an old technical saying that all gaps are eventually filled. 150, maybe you're looking at 250. Let's see here. I don't see, the only thing I can see here is right below 250. Maybe that's what you're talking about. That would be a little bit too much of a steeper decline. It could fill, and then I would have to see, I wouldn't get as aggressive there because you're so close to the low. Now, you could just simply buy Tesla and have a very, very tight stop. So let's say you got down to 243, okay? You'd have a stop below, 215. You'd have that tight stop. But given this setup, this is something where I wouldn't expect that that gap to be filled. But this is something where I would look to, see how it traded first if it did get that low. Trading inside my Roth IRA recently, is that a good idea in your opinion, and any disadvantages to it? So, I mean, if you're trading with inside a retirement account, the good news is that you don't have to pay taxes. The bad news is that you can't take it out without a penalty. Those are the advantages and disadvantages. It's your retirement account, maybe not to take as much risk. That would be my my only suggestion. But those are the things that you have to weigh. So, all right. So I think it's going to be exciting with the trade deal with inflation. Okay. We're looking at, a situation where we could get an opportunity to buy some weakness within this sector divergence, within the technical divergence. Keep an eye on Tesla. Okay. And keep an eye on gold. All right. And I will see you next week. Thank you very much for tuning in.